Well, risk is never easy. The obvious answer is that you invest in the Magnificent Seven because you think their earnings growth will be so rapid. You overweight them, and then it isn't. So your large holdings suffer because they didn't live up to expectations. But it's really important to look at risks two-sidedly. So the corresponding risk is that you don't overweight them, and you don't have a market weight, and then they perform earnings-wise as expected, and you're left behind. So it's not just what will you do about the risk of a shortfall in anything. It's also what will you do about the corresponding risk that there is no shortfall, and there's no easy answer. I don't have any knowledge about the Magnificent Seven, and of course, Oaktree is not active in the mainstream stock market. But I just think that in our business in general, there is no room for certainty, as Twain would say, and that extends to the Magnificent Seven as well. And I must say, when I was listening to your question, every bubble ensues from widespread conviction. Everybody believes A, they bid the beneficiaries of A up to the moon. It turns out it's overdone. And, people are now convinced AI will change the world. I imagine it will. I don't know how to invest in it. I don't know if the future of AI is adequately reflected in the price of the beneficiaries or over reflected. But, if you go back 25 years ago exactly to mid-1999, everybody was sure that the internet would change the world. And it did. And can you imagine today living without the internet and e-commerce and so forth? And yet the internet and e-commerce stocks that were the beneficiaries of that thinking in the TMT bubble of the late 90s, the vast majority are now worthless. So I run through this only to say that this stuff isn't easy. And anybody who thinks it's easy is misleading themselves. And so to say, well, I think that that AI will be very important. That's the easy part. But knowing how it should be reflected in portfolios, that's the hard part.